Welcome to Breaking News to Trading Moves. Today we're focused purely on the analysis of that multi-year chip deal announced between OpenAI and Advanced Micro Devices, AMD.
Yeah, and our goal today is really just to quickly identify the companies that analysts are pointing to as, well, winners and losers across different sectors, right? Semiconductors, data centers, all based on what's in this agreement. We want to get you that knowledge fast.
Absolutely. So let's set the stage. What are the main facts of this headline deal? Okay, let's start with the core agreement itself, the details.
The big number that jumped out, obviously, is the scale. OpenAI plans to deploy up to 6 gigawatts, that's GW, of AMD Instinct GPUs.
6 gigawatts, and that starts when?
The plan is for the first gigawatt using the MI450 GPUs that comes online in the second half of 2026.
And there was something else too, structurally, the warrant.
That's right. OpenAI also got a warrant. It lets them buy up to 10% of AMD, the company itself.
Okay, so it's not just buying chips.
No, definitely not. And you add the financial guidance from AMD, they're talking tens of billions in revenue from this partnership. That context, the scale, plus the warrant, plus the dollar figure, it shows just how substantial this commitment really is for the market.
So 6 gigawatts. It's hard to picture that.
It is. Think about it like dedicating the power grid of, I don't know, several small cities. Just for AI compute, it's a massive capacity commitment. Really sets a new baseline.
All right, let's move to the winners. The analysis points pretty clearly in some directions, starting with semiconductors.
Yeah, the most direct one, naturally, is AMD itself.
Right, named as the anchor supplier for OpenAI's next-gen stuff.
And the thinking here is it's more than just the revenue, though that's obviously large. It's about validation. Getting these direct, multi-generation orders from OpenAI, it confirms AMD's strategy with Instinct GPUs is working at the top tier.
And it helps them gain market share against, well, the big player.
Exactly. It carves out definite non-NVDA market share in AI accelerators. A big win for them.
But AMD doesn't operate in a vacuum. They need an ecosystem, right? Servers.
Absolutely. Which brings us to the server integrators. The analysis highlights Supermicro. That's ticker SMCI.
Why SMCI specifically?
Well, they're known as a leading integrator for AI servers, and critically, they already ship platforms using AMD GPUs.
Ah, okay, so they're ready to go.
Pretty much. If AMD is selling all these GPUs, SMCI is a key player that puts them into the actual racks, the servers, handles the cooling, the whole physical setup.
So the logic is simple. More AMD demands likely means more business for SMCI building those systems.
That's the direct link analysts are drawing, yes.
Okay, let's move up the chain. Before the GPU gets into an SMCI rack, it needs to be made. What about the equipment companies?
Right, the manufacturing side. That 6 gigawatt number. It implies a huge amount of new chip production capacity is needed down the line. Even though deployment starts in 2026, the planning, the orders for factory tools, that has to start much sooner. Those lead times are long.
So this deal signals immediate capital spending plans are likely kicking off.
Correct. It drives orders for foundries, packaging, the tools needed across different chip nodes.
So who benefits there? Specific companies.
You look at the big wafer fab equipment guys. Applied Materials, AMAT.
Why AMAT?
They provide essential tools, etch, deposition, inspection. Building advanced GPUs, especially at this scale, requires a lot of their equipment. It's direct capital expenditure.
Okay. And Lam Research is also mentioned, LRCX. What's their angle?
Lam Research, LRCX, is strong in etch and deposition too. But they have particular leverage, analysts think, because of HBM high bandwidth memory.
Ah, the memory stacked right on the GPU. Crucial for AI performance.
Exactly. And making HBM, integrating it, involves really complex etch steps, lots of them. That's Lam's specialty.
So this massive AMD order basically locks in demand for Lam's high-end tools for years.
That's the view. It supports demand for that sophisticated manufacturing capability.
Let's swing back to that 6 gigawatt number again. The power consumption is just mind-boggling. And the physical space needed.
It really is. Like you said, it sounds more like planning a utility than a tech deployment.
So what does that mean for the buildings themselves, the data centers?
It means standard data centers probably won't cut it for this scale. The analysis suggests this favors those really large, neutral, interconnection-focused campuses, the ones built for big AI colocation.
Okay, so data center REITs, real estate investment trusts, they look like winners here.
Yes. Two names come up often in this context. First, Equinix, EQIX.
Their focus is interconnection, right?
Precisely. They have campuses designed for that heavy data traffic, low latency movement between systems, which is critical for these large AI clusters.
Makes sense. And the other one?
Digital Realty, ticker DLR.
And their angle.
They have a lot of exposure to wholesale and colocation, basically renting out large chunks of powered space. Exactly what hyperscalers need for these massive megawatt AI deployments.
So for both EQIX and DLR, this OpenAI commitment helps solidify the demand picture for their kind of large-scale infrastructure.
Yeah, it suggests that the need for this specialized, power-hungry data center space isn't just a blip, it's a sustained trend.
Okay, we've covered the winners. Now, inevitably, there's the other side. The losers, or at least companies facing new pressure. Let's start with the direct competition.
Right. The core idea is simple. Budgets aren't infinite. If OpenAI commits tens of billions to AMD over multiple years.
That's potentially money not going elsewhere. Share of wallet pressure.
Exactly. AMD just secured a large guaranteed slice of OpenAI's future spending.
So the elephant in the room is NVIDIA, NVDA. But hang on, they're still dominant, aren't they? Calling them a loser feels strong.
It does feel strong, and loser might be too harsh. Maybe facing pressure is better, but the market definitely reacted. When a top customer like OpenAI, who has been heavily reliant on NVDA, makes such a large long-term commitment to a competitor, well, it signals a change.
A diversification play by OpenAI.
Right. And for NVDA, it introduces a clear risk of losing some future market share, even if they remain the leader overall. The stock dipped on the news because the market saw AMD becoming a truly viable second source at the highest level.
So even losing a small percentage of potential future growth in this exploding market is seen negatively.
That's the perception, yes. Every dollar committed long-term to AMD is notionally a future dollar NVDA might not get from that specific customer.
Okay, that makes sense. What about custom silicon? OpenAI was working on its own chips too, right?
They were, and reports linked them with Broadcom, ticker AVGO, on those efforts.
So pressure on AVGO too.
Potentially, yes. The thinking is, if OpenAI is now getting a huge supply of very high-performance, off-the-shelf GPUs from AMD locked in, does that change the calculation for investing heavily in their own custom chip development? Maybe the budget priorities shift.
So the custom silicon projects might face tougher justification or allocation trade-offs, potentially impacting partners like Broadcom.
That's the potential downstream effect being considered.
All right, let's broaden out from the main GPU players. What about other companies trying to build AI accelerators? Does this deal affect them?
Analysts think it does make things tougher for them, yeah. When a huge buyer like OpenAI commits so heavily to the two main GPU ecosystems, AMD and NVDA, they also commit engineering resources, software development, everything around that hardware.
It reinforces those two platforms.
Exactly, concentrates the effort. And that makes it harder for alternative accelerator roadmaps to get traction, to secure those big design wins. The hyperscalers seem to be betting on the two leaders.
Okay, so who specifically might find it more difficult now?
Well, Intel, ticker INTC. Their Gaudi line is competing directly for those AI training and inference sockets. This just raises the bar.
They have to convince buyers to invest in a third software stack, basically.
Right. And Qualcomm, QCOM, they've been building up their data center AI ambitions. This focus by OpenAI on GPUs from AMD probably makes that climb a bit steeper too.
Okay, one last category. Software pure plays in the AI space. They don't make chips, so how does this hardware deal put pressure on them?
It's a bit more indirect, but it's about the overall market structure evolving. As OpenAI builds out its own massive infrastructure with AMD, they become an even more powerful, vertically integrated platform. They offer the foundation models running on their own optimized hardware.
Got it. So enterprises might lean towards getting their AI solutions directly from these big platform providers.
Rather than buying standalone AI software tools from third parties, budgets might shift towards the big integrated platforms.
Squeezing the niche software players.
That's the concern. It could put valuation pressure on some of these standalone enterprise AI software companies.
Any examples mentioned?
C3.ai, ticker AI, comes up as competing for enterprise AI spend against these integrated giants. And also BigBear.ai, BBAI. Another name in that AI software sector that could be vulnerable as the big foundation model providers consolidate hardware and software power.
So looking back, this one deal between AMD and OpenAI seems to crystallize a lot for the market watchers. The analysis pretty clearly maps out perceived winners. AMD, obviously, but also key infrastructure players like SMCI, the equipment makers AMAT and LRCX, and the data center REITs EQIX and DLR.
Right. And on the flip side, it highlights the competitive pressures.
Yeah.
For NVDA, it's about potential future share. For custom silicon partners like AVGO, maybe shifting priorities.
And for alternative accelerators like Intel's Gaudi or Qualcomm and those pure-play AI software firms like AI and BBAI, it potentially makes the competitive landscape more challenging.
Definitely. But maybe the lasting thought here, the thing to really watch, is that warrant. OpenAI potentially owning up to 10% of AMD. It raises big questions about vertical integration. Are the biggest AI model companies going to become part owners of their key hardware suppliers?
A blurring of the lines between customer and owner.
Exactly. How tight will that relationship become? That's something you'll want to keep an eye on going forward. It could signal a different kind of future structure for this industry.
And a final reminder, this is not financial advice or buy or sell recommendations. This is purely the opinion of the author.